Welcome to the Three Questions Webcast series. I'm Wayne Baxter, Senior Executive Manager with One Capital Management. On this edition of the webcast, we're going to address the three questions cross-border investors should ask before investing in Bitcoin ETFs. Thank you for taking time to check us out. And if you enjoy this episode of the webcast, please consider liking this video and subscribing to our YouTube channel. Now, after years of anticipation, the Securities and Exchange Commission has approved filings for several firms to begin trading Bitcoin exchange-traded funds, or ETFs. Some are referring to this as a landmark event in the adoption of cryptocurrency by mainstream finance, while others are very concerned about the potential for fraud and scams. I've invited One Capital Management's Chief Investment Officer to share his thoughts on this episode of the Three Questions Webcast series. Stay tuned. On this webcast, we're going to be reviewing the three questions cross-border investors should ask before investing in Bitcoin ETFs. Joining me once again is Steve Calley. He's the Chief Investment Officer with One Capital Management, and he's also the Chairman of One Capital's Investment Committee. Steve is a chartered financial analyst, and he's also a member of the Los Angeles Society of Financial Analysts. Steve, thanks for taking time for us. Been looking forward to having this conversation with you.
Good to be here as always, Wayne. It's, we always have good, fun conversations on these podcasts.
For sure, yeah. On and off the mic. Well, as you're more than well aware, the U.S. Securities and Exchange Commission voted to allow retail investors to buy and sell Bitcoin as easily as stocks and mutual funds. Now, in scouring the financial media, the reaction has been met with both great anticipation and deep concern. The SEC Chair Gary Gensler had previously said more regulation and investor protection was needed before retail investors could access the crypto market, indicated that in a court filing last year in favor of crypto asset manager Grayscale had really compelled this change. He did add, though, that the SEC did not approve or endorse Bitcoin. Just to get things started here, before we get to our three questions, what was your reaction to all of this news? I've been interested to hear your thoughts on this.
Actually, my reaction is a little bit like the media's, mixed. It's been long anticipated. I've expected it for a while. I do think that it is the right move to have these ETFs available to investors because it does open them up to a broader range of people, and there's a lot of ease in transaction in Bitcoin or any of the cryptocurrencies if you do it through a vehicle like this. So that side of it, I'm happy with. You will hear some of my negative bias on Bitcoin and some of the other cryptocurrencies as we go on with this discussion. But then just so you know, the SEC never endorses any investment. So I mean, they made a really
they're not picking on the Bitcoin ETFs in particular. It's
no. But he is very concerned about it. So he made a bigger deal of it, even though that's standard language for every investment that they approve. Nothing is endorsed by the SEC. I mean, that's typical of government regulators. They never endorse anything. They always wash their hands of everything. And at the end of the day, they can say, see, we told you it wasn't a good idea, or see, we told you it was a great idea, when they actually didn't endorse anything.
Okay, so fair enough. Okay, on that note, let's get to our three questions cross-border investors should ask before investing in ETFs. Question number one: what are the main benefits of investing in Bitcoin ETFs?
That's interesting because it's actually a multi-part question without being a multi-part question. So I'll kind of break it up a little bit. The biggest benefit is the ease of trading and the ease of transacting in Bitcoin. So now, again, what's interesting about that question is it's a little bit multi-layered because you say, what's the benefit to investors? I'm going to go benefit of transactions right now. That's kind of we'll talk about the benefit of the investment side, which is, why you would do it, the strategy, how a little bit later. But let me talk about just how, and it's a huge improvement from the transactional side of things. By doing it in an ETF, like you said, it's readily tradable, just like a stock or a bond or a mutual fund. Investors can buy it. It's got a ready market. You can see the market moves as it ticks every moment. You can buy it without. Remember, if you buy a Bitcoin, the actual Bitcoin, you have to put it someplace. and you have to put it someplace pretty darn secure because there's no identification on it, so somebody could steal it from you if it's just if you just had it in your inbox, it's very vulnerable. So you have to, with Bitcoin, you have to have a safe, a cyber secure safe, so that people can't steal that Bitcoin. By doing it in an ETF, you eliminate all of those extra fees that go along with buying the actual coin. And remember, a coin costs $46,000. So as an investor, you can now buy $100 worth of a $46,000 piece of investment. So from the huge benefits are that liquidity, the ability that you can get to it very easily. You can trade it with almost no fees. You don't have to store it. There's security is much better. So that side of it is very, very beneficial to the investor. The downside, and again, just one risk to that, is that Bitcoin trades a day. The ETFs are going to trade while the markets are open.
Yeah, so Bitcoin's they trade all the time, nonstop, right?
Yep.
Got it. And so the ETFs are basically when the markets are open from 9:30 Eastern to 4 p.m. Eastern, Monday to Friday.
Yeah, and there's a little bit of trading after market and stuff like that, but you really lose the ability to trade it. So if Bitcoin, and it actually happened last week, Bitcoin dropped $1,000 after the market had closed. Well, ETF investors they couldn't control that. They couldn't participate. They couldn't change their investment based on that. So that's one of the downsides to having an ETF. But we'll get into Bitcoin a little bit later about kind of they're pretty complex, and so we'll talk about that a little bit later. Some of those things. So that's that's the advantage from the investment, or the ability to invest inside of things. Now the advantage,
you don't have to have $46,000 on hand for one coin. You can now buy a fraction of a coin and hold it in ETF.
Right. And you can own that within your brokerage account, your securities account that you have right now. If you were buying an individual Bitcoin, your custodian, your Schwab, your Fidelity, whoever it is that's holding your assets, they don't have that. They don't have a safe for you. They don't have, so you actually kind of have that as an outside investment. You got to track both of those. And we actually have all seen stories of somebody losing their combination to their lockbox. And one guy actually, he wrote a great article about it because it took him, I think it was 1.5 years to crack his own password. And he documented the whole thing. He and his daughter worked on it for 1.5 years to finally crack his own password that he had set.
Oopsie. All right. So great answer to the first question, Steve. So question number 2, and again, this is from the eyes of from the view or the lens of the investor. Question number 2, does a Bitcoin ETF fit into my overall investment strategy? This is obviously an extremely important question at this point in time.
Yeah, and that's why I kind of broke that first question. I said there's 2 parts to it. I deferred to this side of it. And the answer is, it depends.
Mm-hmm.
You've had me on here a couple of times, Wayne. You know that my answer is always, there's always 2 answers to every question. And this is truly one of those where it does depend. Does it fit into your investment or not?
I would like to add to this one other thing before you go any further. So I would look at this from a generally speaking, what is an appropriate allocation for a well-diversified long-term investment strategy. I would just add to that. So in other words, is it appropriate? And on top of that, how much money in a well-diversified portfolio should a Bitcoin ETF, Nick, how much should you assign to that? I think a lot of people may get overly exuberant here. So I just want to throw that little caveat in here in terms of how much by percentage of a well-diversified portfolio would you put into something like a Bitcoin ETF? Okay, and actually, I just want to throw out a little bit of a curveball there to you.
No, and I'm actually glad you added that, because that is a little variation, a twist to what we're talking about. But so the answer is, does it belong in my portfolio? The answer is on the individual investor. It depends on what you're trying to accomplish with your financial goals. That's a discussion to have with your financial advisor, to say, does it fit in my portfolio? Should I be taking that? The downside to it is it's a very speculative investment, much more so than most everything else you're going to see within the investment universes. And even when you get into private equity and private credit and alternative funds like that, they're not as speculative in the sense that you're trying to buy a company. There's a lot of reasons to do that. Bitcoin, on the other hand, remember, Bitcoin is a cryptocurrency, which is a non-fiat currency, meaning there's no government that's associated with it. There's actually, this is the other thing, there's no denomination. There's no fiat denomination to a Bitcoin or any cryptocurrency. It's not a dollar cryptocurrency. It's not a yen cryptocurrency. It's not a pound cryptocurrency. It's none of those. It stands alone on its own. But the way the markets treat it is they say, how much of that would be the dollar equivalent to that? How much of that would be the yen equivalent to that? And that means there's going to be variations wherever you are. So it may be priced in dollars in the US and yen in Japan. Well, there's arbitrage opportunities because every once in a while those get out of a line. So you may be able to buy the Bitcoin in US dollars and sell it in Japanese yen if you can do it instantaneously and take that spread. So it's a very speculative. It has a whole bunch of different pieces to it. There is no, I love because the media always has to show that little gold coin with the dollar sign too. There is no coin. There is no representation of what it actually looks like because
there's no physical thing.
It lives in the cyber world. So when you say, does it belong in my portfolio? Maybe if a speculative asset comes in your portfolio, maybe say, I think that, and again, there's a lot of reasons why people think that cryptocurrencies fit in a portfolio because there's a limited number of cryptocurrency. Bitcoin, for example, there's a finite number. So once they hit that finite number, whatever the demand is, that value is either going to go up or go down depending on the demand of those things. So, and cryptocurrency, because it's not a fiat and tied to a country and those things, it has the ability to move across borders very, very easily with very little regulation. It can be done very quickly around the globe. So again, it may make sense to have something like that in your portfolio. But again, it's very speculative. So you need to be aware that how much am I willing to put into a very speculative asset and say, where do I think things are going to happen? That's why I say it's really important you talk to your advisor to say, does it fit? Is it part of my strategy to be in this? Because if you're just building your base, it doesn't belong in there. Once you get to a certain level and you can add risk and you can add speculation, then it might fit into your portfolio better than it would as a young person who's just starting out. However, on the other hand, a young person starting out is going to say, hey, I love this. It's a new asset class. It's great. I want to own some. And it may fit then in their portfolio at a certain percentage. So that kind of gets to how much should be in there. Mm-hmm. Understanding the nature, understanding the risk is a really big part of how much should be in there. Typically, we would say to somebody that they should have less than 5% of their portfolio in something that's as speculative as this. Again, depending on situations, it may be a little bit less, and maybe less than that, it may be more than, depending on an individual circumstance. Obviously, somebody has a lot of money, and it's like I said, they have more to play with, if you like. Play is the wrong word. They have more to invest with, and they have the ability to lose more and not affect their livelihood. Then maybe they could do a little bit more. But again, because of the risk parameters of that, you want to keep that to a relatively small percentage of your portfolio. Like I said, up to 5%.
I must admit, I'm a little surprised that you said as much as 5%. I would have hazarded a guess. If someone was to ask me, I would have said no more than 1%. So 5%, that's pretty bullish. So
remember, that was with the caveat of depending on the situation, having the understand the risk and the ability. Because like I said, my own personal bias, I'm not a big fan of cryptocurrencies. I am for some things, but there is very little regulation. There is, it does have the ability to move very easily without Again, we're talking the crypto itself. The ETFs, which we're talking about, are a little bit different because there's a little bit more regulation, there's a little bit more structure around them, there's a little
And
bit
it is
more.
tied to a currency, like you said. It is now,
It's tied to a
if we,
currency
if
now.
in a big Bitcoin ETF is going to be a US dollar denominated.
Yep.
So basically taking something that does have no actual currency assigned to it, it now does.
Yep.
Interesting. All right. So why don't we get to the last of the third question? So the third question is cross-border investors should ask before adding a Bitcoin ETF to their investment portfolio is, what are the risks, Steve Cowley?
This is where, like I said, I'm not a big fan of crypto. I understand it. I understand why people are doing it. There's a discussion that it's the new gold.
Yes.
It's going to be the cyber gold instead of actually owning gold. Well, gold is an investment that people use. They like to say it's an inflation hedge. It's actually not a very good inflation hedge. What gold is a good investment for is volatility hedge. When things go bad, gold tends to hold its value better than other things. So when there's a lot of volatility, uncertainty, that's when gold tends to hold its value and tends to prove itself. So the notion is that cryptocurrency is suddenly going to be the new gold. To me, it doesn't hold weight. I don't think that's true. And not only that, but since crypto's been around, we've had two major, scares in the marketplace where gold was down 1 or 2 or 3%. Well, crypto was down 50% and 70%. And so it didn't hold its value in uncertainty. So it's not the new gold. So if somebody tells you it's the new gold, don't believe them. Time has not shown that. And the history that we have so far shows that it has nothing like gold in that standpoint. So that's one of the risks. The other risk with these ETFs is that you need to look at what the ETF is and what it holds. I was looking at some of the ETFs because they've just come out. Some of them are they're owning, somebody is owning the Bitcoin, the sponsoring entity, and then they're selling percentage units of what they own. Now, what happens in that is the more demand for the ETF, the more people to buy into the ETF, they have to go out and they have to buy more Bitcoin, and therefore it can drive the prices. I mean, that's supply and demand, but it's kind of a secondary supply and demand. You're demanding the ETF, which then creates demand for the Bitcoin outside of the ETF,
Which would raise the price, obviously.
which can raise the price. The other side of it is, though, but as you look, some of those ETFs, they're all trying to match what happens in the actual Bitcoin, but how they do it is very interesting. Previously, and you mentioned one of the Bitcoin ETF that's been around for a long time, they were doing with the futures market. So they were actually able to buy futures on that Bitcoin. And that's kind of how they got the SEC approval. They weren't actually owning Bitcoin. They weren't owning that. As I was looking at the Bitcoin ETFs that have come out, these new ones, some of them are using not necessarily Bitcoin. They're owning, it's very similar to a futures. They're trading on the notion of it, and they're kind of creating almost a fictional Bitcoin within their ETFs. So you got to be careful as to which ETF you look at, how they're doing, what's the underlying. I looked at one and it said Bitcoin commodity. I mean, that was the only holding, was a commodity that they had actually created, not an actual Bitcoin. Another one had a pool of Bitcoin that they were owning. So again, in the ETF markets, you kind of need to know what's happening. Now, again, this is not unique to Bitcoin, because one of the things that happens with the gold ETF is you run into the same thing. You have some ETFs that own actual gold. You have other ETFs that only own the futures or the commodities. They try and match it. And one of the knocks on iShares gold is it's so big that they really can't own that much gold. So they own some gold, and then they own a whole bunch of futures on gold. Well, if the proverbial stuff hits the fan, they can't buy that gold. So all of a sudden that gold ETF doesn't have the gold. They just had a future that somebody defaulted on. That could happen in Bitcoin as well if these things get big and if they're forced to own futures and commodities and different things that are not Bitcoin. So these are risks that come into. You have to understand not only the nature of Bitcoin risk, but you got to understand the nature of the investment risk that goes along with it as well. And you know, I was going to say one other thing that was pointed out is that Bitcoin is it's a thematic investment. It's people excited about Bitcoin. Well, usually when these companies roll out these things, it's at the height of excitement where everybody's excited. Sometimes that's the wrong time to own it. Sometimes it's the wrong time to roll it out because you've hit the peak and then everybody loses interest in it and it drops. And there's a number of thematic investments that have done very, very poorly afterwards. Bitcoin's a little bit different.
I think of it just as an incredibly speculative investment.
Yes. Yeah, that's that. Obviously, we talked about that as a risk. But again, this one may not be like some of these thematic investments where they peaked and it just goes down. This one, the SEC, because it took them so long to get around it, and everybody expected it. But that also runs into it because the expectation was the SEC was going to approve these. For the last 4 or 5 months, Bitcoin is up significantly. So it's basically already priced into the Bitcoin that these things were going to be approved and there was going to be a bunch of demand. So it's kind of already there. And what's happened is since they've rolled out a couple of days ago, they're all down about 5 to 10% because you buy the news, or I should say, you buy the speculation, you sell the news. It's kind of happened in the marketplace right now. So they could be good investments. They could be something that works out if you're interested in cryptocurrency. I think the ETF is a really good structure. Just understand some of the risks that go with it. Understand it is a speculative investment, and that you, as always, you need to, especially a speculative investment, you need to realize that if I put money into it, if I lose it all, will it change my life? If the answer is no, maybe it fits. If the answer is yeah, that would really change my lifestyle, then do not do it.
Perfect. Beyond the questions we addressed, it's also, I think, important that in its overall planning that there are potential for tax implications. There's also issues around liquidity. And again, I think last but not least, with any investment, it's crucial that you seek advice from a professional. You had mentioned that earlier, Steve. This is not a do-it-yourself strategy. If you're going to incorporate it into a well-diversified portfolio. Before we wrap up this segment of the webcast, or this episode of the 3 Questions Webcast, any final thoughts or suggestions you want to share with us? This is a good chance for you to do that now.
Well, thank you, Wayne. It's always great to share our opinions and our thoughts back and forth, and to have our discussions. As we've said before, the discussions we have in private are always entertaining. It'd be kind of fun to be a fly on the wall on some of those. But my final thoughts on the Bitcoin ETF side of things is, I think it's a great way for investors to get it without having to deal with all of the problems that you had with Bitcoin. So I really think this is a positive for those that want to use Bitcoin, that those want to invest in Bitcoin, that those want to speculate in Bitcoin. I think the ETFs are a really good wrapper to do that in. It takes a lot of the headache out of it. Just be aware of the risk, be aware of some of the other issues, and don't just get caught up in the news. Make sure it's a well thought out plan and that you're aware of what you're doing and why you're doing it. That's my final thoughts.
Steve Calley, thank you very much for joining us again. Steve Calley is the Chief Investment Officer here at One Capital Management. Thanks again for joining us. I look forward to bringing you the 3 Questions Webcast, and I hope you find them educational and informative. Please consider liking this video and subscribing to our YouTube channel. And to receive notification of when our latest webcast has been posted, please click on the notifications bell. Lastly, to schedule an online Zoom consultation with me to discuss your wealth management needs, please click on the link in the description box below, www.onecapital.com/meet with Wayne. Thank you, and we'll see you soon.